This is probably like the greatest wealth transformation that has been happening behind the scenes over the last 10 years, and very few people are talking about it. Trillions of dollars are being moved from one group of people to another, and you don't even know about it. You're left behind like 90% of the Americans. Now, in this video, I don't want to share my opinion. What I want to do is that I'm going to give you facts and numbers, and you can decide for yourself what exactly is happening. Another disclaimer I want to make is that it's very easy to get mad at the system. It's very easy to get mad that the system is rigged and be angry at the richest people in the world. But there is a completely different approach to it. Instead of being mad and angry, you can learn how the system works and take advantage out of it. If you had known what you are about to learn in this video, you would have actually taken decisions that would have made you much wealthier today, and you would have actually taken advantage out of this greatest wealth transformation that has been happening behind your back. It's still happening as of the time that I'm recording this video, and it will be for some time. So please pay a very close attention. This is the S&P 500, and there is something weird about it. Prior to 2016, the S&P 500 wasn't actually growing that much. Like over a period of 20 years or so, it has doubled, which is normal. But after 2016, something fundamentally changes and the stock market skyrockets to the roof. And the question is that why? Like what exactly has happened in 2016 that changed everything? Did these companies suddenly started making more money? Did these companies produce some revolutionary technology that changed the shape of the world? Like, what exactly has happened? Stock buybacks. That doesn't sound exciting. I was waiting to hear something much more interesting. The price of anything in the market is determined by demand and supply. The more people want something, the more they're willing to pay for it, the higher the price goes up. On the other side, if there are infinite supply of that, then the price goes down. If there is a very limited supply of that, then the price goes up. Rolex can produce as many watches as you want, but they're purposely limiting the supply of their watches in the market so that there is more demand than supply and the price stays the same. And that's why they are selling their watches for $20,000, $30,000, $50,000. And a stock buyback is simply that the company itself is buying its own stocks. That sounds weird, right? But that's one way to manipulate your stock price. So if you're a company and you're making so much money, what are you going to do with that money? You can literally go to the stock market, buy your own stock, and your stock is going to go to the moon. Back in the days when companies used to make a lot of money, they would distribute that money as dividends to their shareholders. So if I'm, for example, investing in Apple and Apple made like $100 billion, they would take that money and will redistribute it to the shareholders who are the owners of that business. But when I receive a dividend, that is a form of income. Suddenly tomorrow, Uncle Sam is going to come with the IRS and will demand to pay like 20% in taxes because I just made dividends. Now, you are working super hard and you are making a lot of money and you are paying taxes. The more money you make, the more taxes you're going to pay. Someone who is making $200,000 is paying more than someone who's making $100,000. That is called income tax. The same thing applies when you're receiving dividends. So corporations figure out a way. Why would we actually pay dividends to our shareholders when they have to pay taxes on that? There is a much better and a smarter way to deal with this. We're going to take that money and we're going to buy our own stocks. So when demand for our stock is going to go up, so is the price of the stock. Our shareholders did not receive their dividends, but the valuation of their stocks in the market has grown up. It has increased 5, 10, 20 times. When the price of the stock goes up, that is called a capital gains. And capital gains taxes are not being paid unless you sell your stocks. So if I'm a rich person and I hold so many stocks in the stock market, unless I sell my stocks, I'm not paying any taxes or whatsoever. And I might never actually sell those stocks. Now, take an example of Elon Musk. Like Elon Musk is the richest person in the world. He is like, his net worth is over $300 billion. And he's not selling his stocks. He's simply borrowing money against his stocks at a very low interest rate. and is not paying any taxes. Rich people are getting richer without actually being taxed because corporations are using their profits to buy back their stocks, and that leads the stock market to rise. So when you hear the news that rich people are getting rich, and that's because their capital gains income is rising, and that income is not taxed unless they sell their stocks. Back in 2016, a single share of Apple used to cost $23. After 2016, there is a catastrophic increase in the price of the stock that it has grown by 1,000%. How does a stock grow by 1,000% over a period of just 8 years? Yes, they started selling a lot more iPhones, they started selling a lot more MacBooks, but the primary reason is because they started buying back their own stocks. In 2012, and they bought $10 billion of their own stocks. In 2013, which is next year, they used $60 billion of their income to buy their own stocks. In 2016, they purchased $127 billion of Apple stocks. Who is buying all of the Apple stocks? Apple itself, and that's why the price of Apple stock is going up tremendously. In 2018, $75 billion, 2021, $100 billion, 2022, $100 billion. In total, over the last 8 years, they have purchased $650 billion worth of Apple stocks. So the demand for Apple stock is going up. Who's creating that demand? Apple itself. People who are holding Apple stocks are getting richer while not being taxed. But instead, if Apple took this money and sent it to the shareholders in form of dividends, then I am, as a shareholder of Apple, would have actually paid taxes on this amount of money. I mean, on the portion of that money that I would have actually received. But I'm not paying because I'm not selling my Apple stocks, and they still keep growing in the stock market. And that's why Apple stock has been growing tremendously. And if you think that Apple is the only example that I can give you, then you're mistaken, because everybody in the stock market, like the more successful the business is in the market, the more it's buying its own stock, the bigger or the faster its stock price is actually rising. Google spent $70 billion buying back its own stocks. Meta, the company that owns Facebook, Instagram, WhatsApp, last year, instead of giving back to their shareholders $40 billion, they used that money to buy back their own stocks. Nvidia last year used $21 billion, JP Morgan $15 billion. In total, just for the year 2024, all the corporations in the United States have spent $885 billion buying back their stocks. And that's why the stock market has been growing tremendously, making rich people richer. And those rich people are not paying taxes. And that's why the S&P 500 since then has grown tremendously. So if you understood this simple fact that all these corporations suddenly started buying back their stocks, you'd actually invested in the market, because you know that demand is being created artificially by those corporations who are making so much money. So the question is that, how did we exactly go to that situation? And that's because when President Trump became the president of the United States, the first thing he did as the president of the United States, he cut taxes for everybody. When you cut taxes from 37% to 21%, now you're making more money, and now you can use more money to buy back your stocks in the stock market, driving your stock price up. If you're a CEO of Apple, Microsoft, whatever company that is being traded publicly in the stock market, usually you don't have like a huge salary. Yes, some of those CEOs have like salaries in tens of millions of dollars, but most of the time, your salary is being paid in stock compensation in order to motivate you to work hard or to take decisions that is going to boost the stock price of the business. So if I'm being paid, instead of being paid, for example, $20 million, I will be paid $20 million worth of stocks. And now I have $20 million worth of the stock of the company that I'm managing. So I'm motivated to do everything possible for these stocks to go up, because it's not going to just benefit me, but it will benefit all the investors. So instead of taking those billions of dollars and building a new factory in the United States, I will take those billions of dollars and I will buy back the stock of the business that will boost the stock price, which will make my $20 million worth now $40 million, and every shareholder is going to win. So when we are having such a system, everybody who are owning stocks in the stock market are winning, while the vast majority who don't own a single stock in the stock market are losing and paying all those taxes. The second thing that Donald Trump did is that when he became the president, he introduced a one-time tax on all the foreign income that these corporations have made. Prior to Trump, the corporate tax rate in the US was 37%. Now, to be honest, that is really high because we have countries that have a tax rate of 0% or 5% or 9%. So companies such as Apple, Microsoft, and the rest of them, they've been making a lot of money outside the United States. They've been making money in China, in Europe, Southeast Asia, Latin America, and the rest of the world. And if they would brought that money to the United States, they would pay a 37% tax rate. That's a lot of money. You don't want to do something like that. But when Trump became the president, he introduced a one-time tax to these corporations. If you bring your money back to the US, just pay the 15% in taxes and the rest of the money yours, and you can do whatever you want. Suddenly, Apple, that had been selling iPhones for the last 8 years around the world, kept its money in Ireland. It brought it back to the United States in 2017, paid a 15.5% tax rate, and used all of these billions of dollars and bought back its stock, and that's why its stock started growing tremendously. Just in 2016 alone, those corporations brought back to the United States $2.1 trillion, and they used all of this money to buy back their own stocks, leading those stock prices to rise. And that's why when you look at the stock market, when you look at the S&P 500, you can see that after 2016, the stock market exploded. Like if you go back prior to 1980s, stock buybacks were illegal because the IRS thought that it's a form of manipulation, so they were illegal. Trump is president of the United States again. What exactly he is going to do in order to let the stock prices to grow again, just like he did when he became the president back in 2016. The first and the most important thing that President Trump has already promised to do, he will renew the tax cuts when they are going to expire next year. The lower the tax rate, the more money these corporations can spend on tax on stock buybacks. Let's say, for example, that a company has made $100 billion. Let's deduct the expenses, and for the sake of simplification, let's say that their expenses are $60 billion. So the company has made $40 billion. Now, they cannot use this $40 billion in order to initiate stock buybacks. They first have to pay taxes. And if the tax rate, for example, just again, for the sake of example, if the tax rate is 50%, then they will be left with $20 billion. And this is the money they can use on stock buybacks. But if you reduce the tax rate, let's say to 20%, 20% out of $40 billion is going to be $8 billion. So you're paying $8 billion in taxes. That will bring down your net income to $32 billion. So you're making $32 billion. Prior to the tax cuts, you would make $20 billion, which means that now you have $12 extra billion to spend on stock buybacks. And that's why renewing the tax cuts simply means that corporations will continue to have much more money on stock buybacks than they had in the past. The second thing that Trump promised is that he wants to deregulate the SEC. He's multiple times mentioned that he doesn't like the SEC. And the closest person to President Trump right now is Elon Musk. And Elon Musk repeatedly said that he does not respect the SEC, he does not like the SEC. And who creates the rules and regulates the stock buybacks? The SEC. So I wouldn't be surprised that within his presidential term, he is going to force the SEC to change the rules on the stock buybacks, and it's going to be much easier and much faster, and companies will have more opportunities. If they actually change the system in such a way where corporations will actually be able to practice stock buybacks before paying taxes, that will lead the stock market to skyrocket. You will see some of these stocks simply doubling in a matter of a year. Now, another thing that President Trump could actually do is that he could initiate another one-time income tax. When Biden became the president of the United States, he was much more harsh on the corporations than President Trump is. And when he became the president the first time, he of course introduced the one-time tax. If you bring all the money that you made outside the United States, just bring it back to the United States. So when he's going to renew the tax cuts, he can actually most likely do the exact same thing that he did back in 2017, introduce a one-time tax. These companies over the last 5 to 6 years, or not 5 to 6 years, like since 2017, starting from 2018 up until 2025, they've been making all this money outside the United States. So if Trump is going to propose the exact same thing he did in 2017, they will bring, again, trillions of dollars back to the United States. And just like last time, these corporations spend most of that money buying back their stocks, they would do the exact same thing, leading stock prices to rise. On the other side, President Trump is imposing tariffs on all foreign countries and corporations. Tariffs are the key part in the stock market to keep growing over the next 3 to 4 years. A tariff is basically a tax that you're going to impose on foreign goods that are coming to the United States. So if Germany wants to bring their cars and they want to sell them in the United States, they want to sell their BMWs, if you impose a 20% tariff on them and a BMW costs $100,000, its final price is going to be $120,000. And that is made in order to protect the corporations in the United States. So if you're making foreign goods and services more expensive in the US, that is going to protect US local manufacturers, which means that these local manufacturers now can earn more money because their sales are going to increase. And if their sales are going to increase, their net income is going to increase. And if their net income is going to increase, they will have more money to buy back their own stocks, which means that the demand for their stocks is going to rise, which means that their stock prices are going to rise. Do you see how tariffs can literally lead to the US stocks to actually grow tremendously over the next 3-4 years? But what does that mean for the average American? Imagine you are not an investor in the stock market. You're literally just a simple middle-class guy who is working 9 to 5, who has a good job, who is hardworking, and you're making, let's say, $200,000. You see, I put you in the top 20% of the highest earners in the United States. Now, if you're making $200,000, you're probably like in the top 10%. Now, let's take the average guy. Let's say you are making $80,000. That sounds a bit more realistic, like you are in the top 50% of the highest earners in the US. How does tariffs are going to impact you? Directly. You're going to go to the supermarket and you're going to get your groceries just like you do all the time. And now those products that are being shipped from Canada, from Mexico, from China, from Asia, they're going to be more expensive because when they enter the United States, there is a 20% tariff on them or 30% tariff. You used to buy avocados. I'm not really sure where they bring the avocados to the US, honestly. I don't even know where they grow avocados. I mean, you can let me know that in the comments below. If you used to pay just hypothetically $1 for avocado and there is like a 20% tax, now the final price is $1.20. And now you want to go and buy a car. You want to buy a German car for $50,000 and there is going to be an extra 10% tariff on that. Finally, the final price is going to be $55,000. And that happens to every single thing that you're buying. So when Trump is imposing tariffs, prices for everybody is rising, including for the rich people. But on the other side, rich people are making money because their stocks are rising in the stock market, so they're not worried about these tariffs. They like these tariffs. But you on the other side is suffering. Now, I'm not telling you this in order to make you angry, in order to push you to despise rich people. I'm just explaining to you how the system works. That's how it works, whether you like it or not. And the system is not going to be changed overnight. What you can do to change your circumstances is to start investing, is to learn how the system works, is to find out which stocks to buy and which stocks to avoid. Now, the entire problem with the United States is that 90% of all the stocks are owned by the top 10%. So anytime when a president comes into the Oval Office and starts to make all of these promises, at the end of the day, it's like the top 10% of the people who are making money and getting rich, while 90% of the people are going to suffer. Now, to be fair, President Trump lowered taxes for everybody, like for everybody. Like he literally, if you look at the tax code and you look at the tax brackets, you will see that every single tax bracket saw a decrease in percentages in the taxes that they're paying. So you cannot blame President Trump for that. You can only blame yourself for not taking action and not taking advantage out of the system. Like you can't simply sit down in your house and just be comfortable and imagine that some politician is going to come and do everything for you. Politicians can tell you, this is the system we have. It's your responsibility to figure out how the system works understand how you can profit and take advantage out of it, and take certain actions.